Life is full of risk. All day, every day, we do things that can go wrong. But thankfully, there are protections in place to make things go right. In business, we call those protections internal controls.
Good day, everyone. I am Grillian May Integlicho of Group 2, and I will be discussing about the basic elements of internal control. First, let us know what is internal control. So, internal control refers to methods and procedures implemented by management to control business operations. So, ito po yung ginagawa ng mga employees or ng entity to achieve their objectives. And pag sinabi nating achieve their objectives, meron tayong actually tatlong primary objectives. So, una, dapat reliable ang financial report na pinaprovide ng isang entity. Second, dapat effective and efficient yung pagmamanage ng business operations. And lastly, dapat sumusunod sila sa batas. So, in summary, internal controls can help our company get where it wants to go and avoid pitfalls and surprises along the way. So, itong internal control structure is divided into two parts. So, the control environment and accounting system. So, first, let us discuss the first part, which is the control environment. When we say control environment, it is the corporate atmosphere in which the accounting controls exist and in which the financial statements are prepared. So furthermore, pag sinabing natin control environment, ito ay set of standards, processes, and structures na nagpo-provide ng basis for carrying out internal control across the organization. So yung board of directors and senior management, sila yung nag-i-establish ng tone at the top regarding the importance of internal control, including expected standards of conduct. So, yung management reinforces expectations at the various levels of the organization. So, the control environment comprises the integrity and ethical values of the organization. So, the parameters enabling the board of directors to carry out its governance oversight responsibilities, the organizational structure and assignment of authority and responsibility, the process for attracting, developing, and retaining retaining competent individuals, and the rigor around performance measures, incentives, and rewards to drive accountability for performance. So, the resulting control environment has a pervasive impact on the overall system of internal control. So, another element of the internal control structure is the accounting system. So, pag sinabi nating accounting systems, ito yung policies and procedures na ginagamit ng isang company to ensure accuracy and reliability sa kanilang accounting reports. Para saan? First, to prevent fraud, to control risk, to proactively identify financial issues, to protect resources, both tangible and intangible, from theft and waste, to operate efficiently, to generate timely, reliable reporting, to measure progress towards business objectives and goals, to comply with applicable laws and regulations, to secure outside funding, and to reassure investors. So now we'll go to identifying the activities, risk, and control objectives. So one way to identify a company's principal activities and control objectives is to separate the typical company into four basic operating components. and define the control objectives of the various activities in each component. And these are first the sales control objectives, the production or service control objectives, the finance control objectives, and lastly, the administration control objectives. The 5 general control objectives. So, any issues concerning the control of those transactions should be documented. When reviewing the flowcharts for control weaknesses, 5 general control objectives should be kept in mind. And these are first, authorization, second, recording, third, safeguarding, fourth, reconciliation, and lastly, evaluation.
Good day everyone. I'm John Ernest Fernando and my topic is all about control to user business. Let's talk about cash. Cash or cash controls is cash management internal controls over the cash related policies within a company. Cash controlling receipts and cash disbursement reduce onerous payments, tips, and fraud. Internal controls include corporate governance, company policies, segregation, duties, authorized approvals for purchase, designated signature authority with limits, payments, resilience, and bank account recipients. So let's move out to the investment. There are two types of investment: investment transfer between available for sale and trading investments, and transfer debt securities among portfolios. So, okay, let's start about prepaid expenses. Prepaid expenses are future expenses that are paid in advance, such as rent or insurance. On the balance sheet, prepaid expenses are the first recorded as an asset, as the benefits of the assets are realized over the time. That amount is then recorded as an expense. There is a step to how to control the prepaid expenses. Number 1 is reconcile all prepaid expense accounts as part of the month and closing process. Number 2 is review all employees advance with the payroll and payable stocks at least once in a month. And number 3, acquire approval of the advance payments to the employees. Now let's talk about receivables. Receivables accounts or accounts receivables refer to the money a company customers owns for goods and services they have received by not yet paid. So there's a step to how to control the receivables. Number 1 is confirm payments terms with customers receivables. Number 2 is require approvals of bad debts writes-ups. Number 3 is require approvals of the credits. Number 4, merge invoice quantities to the shipping logs. Number 5, verify invoice pricing. So let's move out about inventory transits. There is a step to how to control inventory transits. Number 1, audit shipments terms. Number 2, audit the receiving docs. Number 3, reject all purchases that are not approved. And that is step of the inventory transits. Okay, let's talk about fixed assets. Fixed assets is the long-term tangible asset that a firm owns and uses to produce income, and is not expected to be used or sold within a year. This next topic are current liabilities. Current liabilities are company short-term financial obligations that are due within 1 year or within a normal operation cycle. So let's talk about inventory accounting. Inventory accounting is a body of accounting that deals evaluating the accounting for changes in the inventory assets. So the company inventory typically involves in 3 stages of production: raw goods, in progress goods, and finished goods that are the ready for sale. So The next topic is inventory valuation. Inventory valuation is an accounting practice that is followed by companies to find out the value of unsold inventory stocks at the time of they preparing their financial statements. Next topic is contingencies. So, a contingency is a potentially negative event that may occur in the future, such as an economic recession, natural disaster, or fraudulent activity. So, these are steps to how to control contingencies. So, number one is include assessment on the contingent debt guarantees in the closing procedure. Number two is include an assessment debt convenience violation in the closing procedure. Number three is include assessment of debt convenience violation in the budgeting process and interim financial planning. Number four is include an assessment of the contingency reverse in the monthly closing procedure.
Next topic is the elements of internal accounting control. There are 7 basic elements that are necessary to meet the broad objectives of good internal and accounting control. These elements are: number 1, competent and trustworthy personnel with clearly defined lines of responsibility and authority. Number 2, adequate separations of duty. Number 3 is the proper procedures for authorizations of transactions. Yung authorizations is pwedeng general or specific depende sa company. Number 4 is the adequate records and documents. Yung mga documents is dapat maayos na naka-record and the asset is controlled. Number 5, proper physical control over both assets and records. Kailangan ng proper safeguard against distractions or other loss ng mga records and documents. Number 6 is the proper procedures for adequate record keeping. And last, number 7, a staff that can provide independent verification is necessary. Next is the level of controls. In reviewing internal controls, the greatest amount of time usually is spent in analyzing and evaluating the very detailed controls that exist. Lahat ng levels ng planning and related control is nahahati sa 3 grupo. First group is the strategic. Sa strategic, ang board of directors at top management ang nagpa-plan at nagko-control sa organizational structure, corporate goals and objectives, long-range planning procedures, marketing policy decision-making, management policy decision-making, and the financial policy decision-making. Pangalawa is yung tactical. Sa tactical naman, ang board of directors at senior management yung nagpa-plan and nagko-control sa annual profit, executive personnel policies, capital expenditures, and the annual research and development plan. Number 3 is operational, where planning and control involves credit approval practices, treatment of uncollectible accounts, billing procedure, and purchasing procedure, salary and wage authorizations, and pension plan performance. Next topic is fraud. Fraud is an intentional financial misstatement or the misappropriation of funds. Some types of frauds are management fraud, employee fraud, computer fraud, and financial reporting fraud. Some causes of fraud are first, poor internal control environment. For example, hindi pinapunish ng management or ng company yung mga offenders. Next cause is existence of heavy financial pressures on individuals. For example, heavy personal indebtedness or maraming utang or merong social unacceptable behavior katulad ng pagsusugal, using of drugs or alcohol. Next is other sources of pressure such as unreasonable profit goals for the company or the company is part of the declining industry. Next is auditing for fraud. There are several reasons why it is so difficult to find. First reason is because there are too many transactions. Next is ineffective use of audit time. Looking for fraud is very time-consuming. There are hundreds or thousands of ways to remove company assets legally, and tracking down all possibilities will fill the work schedule of any internal audit staff. Next is audit have time limits. Katulad ng ibang projects, mayroon pang specific time boundaries. Next is trend analysis is not sufficient. Smaller cases of fraud will not be highlighted by analyzing expense levels over time because the small surges in expense level will not appear significant. Another reason why fraud is difficult to find is because penetrators knows the procedures. Yung mga nagko-commit ng fraud is expert sila and alam nila lahat ng procedures. Pwede ding sila mismo yung in charge sa control procedures kaya kaya nilang itago or linisin yung crime nila. Isa pang reason is because fraud is hard to recognize. Katulad kanina, kaya ng mga penetrators na linisin yung traces kaya mahirap ma-detect yung crime. There are some tools to hone in quickly on likely fraud situations. These are the tools that can be used. Number 1 is to watch the environment. The environment is a key factor. If management has a low regard for controls, that attitude may rub off on employees. If management uses the company for personal gains, then other employees may feel that it is acceptable for them to do so as well. Number 2, watch the controls. If control over an area is concentrated in one person's job, then the opportunity for fraud has been presented to that employee. Number 3, watch employee lifestyle. Some penetrators flaunt their wealth and bring their gain back to the workplace in the form of fancy cars and new clothes. And number 4, be available. Fraud can be surprisingly well known among employees. For the auditor to be told about such situations by employees, availability is crucial.